you can learn another indicator, another strategy, another proven system. But let me ask you something. How many times have you lost on a trade that looked perfect? Perfect breakout, perfect confirmation, perfect setup, and yet your money was gone. I used to believe the market was a puzzle, that if I stacked enough indicators, I would finally win. I was wrong. Because the market doesn't reward intelligence, it rewards those who know when to stay out. And today, I want to show you the one thing that quietly decides who survives and who disappears. Not indicators, not patterns. Volume. Listen carefully. Let me tell you a story that completely changed the way I see the market, and perhaps in some way it may touch your life as well. Back then, I entered trading filled with naive expectations. I believed that if I learned enough indicators, everything would be fine. I believed that if I understood how to read RSI, martingale, Bollinger Bands, moving averages, Fibonacci, Ichimoku cloud, then I would be able to trade. I believed the market was simply a puzzle of signals. Whoever mastered the formula better would win. But later, I realized there was nothing more wrong than that belief. I lost more than 30% of my first account in just a few short weeks. Not because I didn't study. I studied a lot. Every night, I stayed up until 2 or 3 in the morning, reading books, watching videos, testing systems. I even spent money on a $999 course where they promised to teach me how to beat the market. But the market never promised that. The market only responded coldly, pulling down a long red candle, sharp like a blade, cutting straight through my trading dream without a single warning. I lost not because I lacked knowledge, I lost because I was looking at the wrong thing. At that point, I decided to stop for a while, step away from trading, take a break. And it was then that I met him, the man I still call the forest keeper of the market. He lived quietly on the outskirts of the city. No social media, no private groups, no P&L screenshots, no courses. Yet those who had truly traded long enough all knew of him, like an old-school player, silent and terrifyingly precise. I was introduced to him by an older trader. The first time we met, I asked, "Which indicator do you use to confirm entries?" He smiled gently and pointed at the chart on his old screen. There was nothing on it except candles and volume. Then he asked me, "Do you know who actually draws those candles?" I hesitated. I didn't answer. He continued, "Volume is not an indicator. Only real money can draw real candles. Indicators only retell the past. Volume is the only thing that whispers about the present." I stayed silent. He handed me a piece of paper. On it were 3 large words, written in red ink: money, fear, greed. Indicators don't tell you who is afraid. Indicators don't tell you when sharks are accumulating. Only volume can do that. From that day on, I followed him. Not like a student copying every step. I simply sat there and observed. I watched the way he looked at the chart, as if he were watching a river quietly changing its direction. He didn't trade every day. There were even weeks with not a single trade. "Not because I'm afraid," he said, "but because the sharks haven't shown up yet." He taught me that volume is blood and price is only the skin. Indicators are just makeup, covering the blood flowing underneath. He said, when volume rises but price stands still, that's where a trap is being built. When volume dries up but price is still being pushed, that's when the sharks have already left. And from that moment on, I began to let go of indicators, one by one. No RSI, no EMA lines, no MACD, no divergence, only an empty chart and volume. I remember very clearly one time, gold broke through a resistance level that had held for 6 months, a perfect breakout by every technical indicator. But he didn't enter. He said only one thing: volume didn't increase. That's not real money. It was just a performance. And he was right. Only 1 hour later, price collapsed without mercy. I asked him how he knew. He smiled.
Because only sharks have enough capital to push price far enough to matter. If volume doesn't rise, it means the sharks are staying out. And when the sharks stay out, so do I. From that moment on, I began to see the market differently. Volume spikes inside a sideways range. I know someone is building liquidity. Small volume, but price keeps rising steadily. I know money is quietly pushing from underneath. Large volume inside a small red candle. I know someone is distributing without leaving footprints. I don't need to be right every day. I only need to be right once, at the moment volume shows that the sharks have entered. I realized then, indicators are only the afterimage of the past. Volume is the heartbeat of the present, and sometimes it is the first whisper of the future. If you're trading with dozens of indicators, if you're confused between MACD and RSI, between EMA 50 or SMA 100, stop. Look at volume. Ask yourself honestly, who is buying here? Who is selling? Where is real money flowing? Because the market doesn't run on logic, it runs on capital, and only volume tells the truth. That was the first lesson, and it was also the door that led me out of the darkness. A door opened by that quiet teacher of mine, not with words, but with a single look. Quiet trading bows in gratitude to all of you. Those who have listened quietly, supported silently, and stayed patient with the channel throughout this journey. The stories of falling down, the lessons carved deeply into memory from my teacher, in the end, they are only scattered fragments of the past. They mean nothing without someone listening. You, the one who feels each breath of the market, each tremor of belief, and every step I have walked. Every video I make is not content, it is a small gift, wrapped with all the respect I have for you as a true companion on this path. Thank you for believing in this journey. Thank you for choosing to stay, and thank you for still being here. I once knew many people who entered the market with bright eyes. They came believing that if they studied enough indicators, trained their techniques hard enough, and controlled their emotions well enough, they would win. They were serious people, not careless gamblers. But now, they are no longer here in the market.
Not because they weren't intelligent, but because they failed to see the one thing that truly runs this market: volume, living money. I remember Alex, my closest friend, the one who walked beside me in the early years. Alex was good, extremely good. He could program trading bots, backtest hundreds of systems. He owned an entire library of models, from Wyckoff to harmonics, from price action to Elliott wave. We used to argue for hours about optimal strategies, about combining RSI with moving averages and Bollinger Bands. But there was one thing Alex always ignored, and it was the very thing that eventually drove him out of the market for good: volume. I remember that day clearly. Gold was hovering near its all-time high. Positive news was everywhere. Interest rates were kept unchanged. Politics was stable. Gold was forecast to keep rising. Alex entered a very large long position. Every indicator agreed. RSI breakout, bullish MACD divergence, EMA 20 crossing above MA 50. Even the H4 candle closed as clean as a textbook example. But there was one thing that did not agree: volume. Trading volume suddenly dropped while price was breaking the high. Volume fell to its lowest level in 7 days. I called Alex and said, "This volume looks strange. I suspect this is a false breakout." Alex laughed. "You always doubt everything. I trust the model. I trust the data. The sharks can't break the price right now." And then, just 2 hours later, the market collapsed. A long red candle, like a gunshot exploding in the middle of a dark forest. Alex cut the loss, but most of the account was already gone. He didn't say anything to me. He quietly deleted every trading app, and from that day on, he never returned to the market. I once asked my teacher, why did technically skilled traders still lose? He silently poured tea and said, Because they see the market as a game of geometry. They believe in patterns, they believe in crossings, they believe in backtests. But the market is not mathematics. The market is a battle between capital and fear, and only volume can draw the map of that battle. Then there was another man. His name was Daniel. He had iron discipline, never held losing trades, never broke his rules. But he fell because of one thing most traders never pay attention to: liquidity. That day, USD/JPY had been moving sideways for almost 2 weeks. Everyone was waiting for a breakout. Daniel placed a buy stop in advance. The news came out, filled. Positive news. Price broke upward, for real. But only minutes later, price violently snapped back, swept the stop loss, then bounced upward again. Daniel was furious. He entered a second time, doubling the position size. This time, price moved in his direction, but volume spiked abnormally. Then, a sudden, sharp reversal. I looked at the chart and said only one word: trap. Volume surged, but price failed to make a new high. That was the sign that sharks were distributing, not pushing price for real. That trade burned almost the entire account, and Daniel stopped trading for a full year. When he returned, he traded with very small size, like someone who had been deeply wounded. The market does not kill people. It is the illusions inside them that finish the job. The market doesn't need to be powerful. All it takes is a slight shift in volume at the right moment to herd millions of traders straight into a trap. I have seen many talented people disappear, not because they were foolish, but because they trusted the precision of their tools more than the nature of money flow. They measured RSI, but never measured the greed of large players. They counted Elliott waves, but failed to hear volume screaming. My teacher said, "Volume is the voice, price is only the image. Those who look only at the image and refuse to listen to the sound will eventually be led astray." I'm not telling you this to scare you. I'm telling you to wake up. Trading is a survival game. It is not for those who believe they are smart enough to predict direction. It is for those willing to listen to what the market is saying, not what they want to hear. If you have ever lost money on a beautiful breakout, if you have ever been trapped by a perfect technical signal, then let me ask you, did you look at volume? Did you notice its unnatural silence or hear it crying out in desperation? There are people who never return to the market again, not because the market is too cruel, but because no one ever taught them that volume is the heart of the chart. Volume is not just data. It is a trace, the footprint of someone who entered the battlefield before we even noticed. That was the first sentence in a lesson my teacher called Dissecting the Market Through Money Flow. No blackboard, no slides, just an empty candlestick chart and volume resting quietly below, like an underground river rushing beneath a calm lake. He didn't draw patterns. He simply divided volume into 3 main types of movement, 3 layers of how money enters the market. The first layer, liquidity building volume. This is the first illusion. Sharks never rush. They create sideways ranges like the flat surface of a lake before a storm. My teacher pointed to a sideways zone on the gold chart. 17 consecutive candles moving in a very narrow range. Volume wasn't high, but it was steady, very steady. Occasionally, small spikes appeared, not large enough to matter, but just enough to distract. He said, when sharks want to buy a large position, they can't buy all at once. They need liquidity from retail, so they nurture a zone. They create liquidity with news, with light stop-loss sweeps, over and over again, until they have enough inventory. At that point, price hadn't moved yet, but volume had already told us that someone is accumulating. The second layer, shakeout volume. Not every drop is real distribution. Sometimes it's just a shake, pushing price down,
forcing retail into panic selling and then absorbing everything back. My teacher showed me a section of a Bitcoin chart. Price dropped $3,000 in a single move. Volume surged. Immediately after, the market snapped back, rising sharply $5,000 straight up. He tapped lightly on the screen. This is a shakeout. Retail is selling out of fear, but volume doesn't tell that story. If it were real dumping, price would have continued falling. Instead, it stopped, reversed, and never looked back.
I asked my teacher, how do you know it's accumulation and not distribution? He smiled. Because if sharks were selling, they would never allow price to snap back that quickly. But if they are accumulating, they want retail to sell fast so they don't have to buy at higher prices. Large volume, price reverses. That's the moment the invisible hand is quietly collecting inventory. The third layer, real execution volume. This is when the war begins. No more acting, no more intimidation. This is when sharks close their remaining positions, throw the door wide open, and pull the trigger on the first real shot. There is usually only one true breakout. Price breaks out of accumulation. Volume rises steadily. Not a single spike that fades, but sustained flow across 3 or 4 consecutive candles. Each retest, volume holds its rhythm. No long wicks, no pretending. This is real execution. No hiding, no probing. I asked my teacher, so when do you enter? He answered, when 2 of the 3 signs appear consecutively and volume does not betray them. Not earlier, not later. Only when every layer of skin has been stripped away does the market's real body appear. From that point on, I learned to act like a sniper. I don't enter when the market looks beautiful. I enter when volume reveals who is truly holding the gun. I wait for long sideways zones where everyone grows bored and gives up. I wait for sudden shakeouts where retail panics and sells. I wait for volume to suddenly come alive, not with noise, but with a steady breath, strong and precise. Then I enter, slow but certain. 1 trade a week perhaps, but almost never the wrong direction. My teacher taught me to see the market not with my eyes, but with feeling. The feeling of someone who has been stabbed in the back enough times to finally learn to hear footsteps behind every candle. You can trade with 10 tools. You can study hundreds of patterns, but if you cannot see volume, you are fighting in the dark. Because price can lie, news can be scripted, but volume always leaves traces. There is one thing my teacher always emphasized. Volume is not just data. It is a dialogue between those who know exactly what they are doing and the crowd that has no idea it is about to drown. When I was inexperienced, I thought volume was just a secondary element, a lower panel to glance at. Only later did I understand. It sits below not because it is less important, but because it is the foundation. Like blood, not the first thing you see, yet the thing that sustains all life. My teacher once said, don't look at the market as a sheet of paper. See it as a dark room full of people. The winner is not the one who speaks the loudest, but the one who stays silent and steps at the right moment. I asked, how do you know when to step? He pointed at the volume. This is the sound of footsteps. Listen, it never comes alone. From the day I focused on volume, I was no longer enchanted by the beauty of candlestick patterns. Even a perfect pin bar at the bottom no longer shook me. A break above a moving average no longer excites me. Before pressing the button, I learned to ask myself just one thing. Who is putting real money in right now? Without money flow, every pattern becomes meaningless. Without volume behind it, every breakout is just stage magic. My teacher taught me one rule. I carved it into the edge of my trading desk. Price is the actor, volume is the script. If you want to know whether the play is real or a deception, you read the script, not the performance.
There were days I sat in front of the chart for 7 straight hours without placing a single trade, just waiting for a price zone to be cleared. What does cleared mean? It means sharks must first drain retail of patience, exhaust their orders, break their belief, or push them into excess greed before making a move. When that happens, volume begins to change its nature. It no longer fluctuates meaninglessly. It gains structure. It gains rhythm. It leaves signs. Like hearing the sound of rushing water from far away and knowing a flood is coming. You don't need to see it, you just need to feel it. I also learned to recognize dirty volume. There are days when volume spikes violently, but price barely moves. I don't rush, because my teacher said, volume without movement means the cards are being dealt. Price moving without volume means a scene is being performed. I learned to distinguish real execution volume from volume used for misdirection. And then I realized a bitter truth. Most people lose not because they didn't study enough, but because they entered when the sharks were still asleep, or worse, when the sharks were setting traps. On a rare occasion, my teacher replayed a screen recording of one of his trades. He pointed to an H1 candle with a slight increase in volume, just enough to exceed the 3-day average. He said, "You see nothing special in that candle, right?" But before it, 16 consecutive candles had extremely low volume, so even a gentle push was already the first knock on the door. I asked him, "So when do you enter?" He answered, "When 2 of the 3 signs appear consecutively and volume does not betray them." Don't enter when price looks good. Enter when doubt is strongest. That is the difference. Traders enter when everything is already clear. My teacher entered when volume was telling the truth and price was still wearing a mask. I once kept a trading journal using volume alone. No indicators on the chart, only volume numbers and price zones. And I felt as if I could hear the heartbeat of the market. No more confusion, no more FOMO, no blind hope, no vague fear. That was when I understood. Volume doesn't give you instant victory. It gives you the calm not to die early. People often ask, how does a good trader enter? What setup do they use? What tools? What method? What time frame? I asked all of those questions once, until I witnessed the final trade my teacher ever placed. And then I understood. A real trader doesn't enter because a signal appears. They enter because they can feel that money flow has chosen a side. That trade didn't happen in a dramatic setting. No news, no big wave, nothing at all. Only a long silence, like the space between 2 breaths.
It was the 14th day. I remember it clearly. Every morning, he opened the chart at exactly 6:30. He only looked. He never touched the mouse. On the morning of the 14th day, he called me over and pointed at the Euro-USD chart. The market was too quiet. Retail had given up. The sharks had enough inventory. I watched price move sideways inside a very narrow range for more than a week. At first, volume was extremely low. Then it began to rise, not explosively, but steadily, like a calm, regular heartbeat. I asked, "Is this accumulation, teacher?" He nodded, "Yes, but not enough. We still need one more shake, one sharp pull down to force weak hands to let go." 30 minutes later, the shake appeared. A long red candle pierced straight through the sideways range. Volume surged. Most people would think it was selling. He smiled. Why would sharks sell with a move that big? They weren't selling, they were clearing the ground. 30 minutes later, the next candle formed. An inverted pin bar, a clean rejection, high volume. Price did not continue downward. I looked at him. He had already placed a buy stop right above the high of that pin bar. I asked, "Why don't you wait for more confirmation?" He said, "No need. Volume has already spoken. Price is only trying to deceive those who were still doubting." The order was triggered. Price surged. In just 15 minutes,
His account was up more than 6%. He closed the trade. I was stunned. "What if it goes higher, teacher?" He took a sip of tea and smiled. "I don't need more. I only need what is right and sufficient. The rest is for the greedy." After that trade, he shut down the computer, led me out of the room. We walked up a hill, through a quiet green tea garden. He asked me, "Do you know why people die in the market?" I stayed silent. He continued, "Because they think they must fight every day. They believe trading means constant action. But in truth, the winner is the one who knows how to wait and acts only when everything is already done, when the script is clear, when volume no longer contradicts price." I never forgot that moment, a trade that lasted exactly 1 minute, but was the result of 14 days of silence, observation, recording, and patience. I realized then, a survival trade does not come from sophisticated techniques. It comes from understanding the market more deeply than the majority, and enduring longer than the rest. Volume never speaks directly, it only hints. Only those who are quiet enough can hear it. And my old teacher was not a genius. He was simply one of the few who still retained patience in a market where everyone is in a hurry. There were things he never explained clearly, not because he wanted to hide them, but because he believed that if you are calm enough, you will understand on your own. And if you are in a hurry, no matter how much I explain, you will hear nothing. It took me many years, through many losses, many moments of confidence followed by disappointment, to slowly understand. He did not trade to become rich. He traded so he would never be poor again. The market is full of stories about massive wins, accounts doubling, 5-fold, 10-fold in just a few weeks. But my teacher, for 25 years, never allowed his account to lose more than 3% in any single month. He never talked about how much he made. He only said, "I'm still alive. I'm still here. That means I haven't been swallowed." His invincibility did not come from never losing. It came from how he thought about survival in the market. I once asked, "Aren't you ever afraid of reversals?" He said, "Of course I am. I'm always afraid. And because I'm afraid, I don't gamble. I wait. I observe. I probe through volume. If volume doesn't stand with me, then I don't stand with price." His undefeated mindset lay in extreme simplicity. An empty chart, one primary time frame, one single approach. Reading volume to recognize the moment when sharks make their move. No stacked indicators. No expectation of calling tops or bottoms. No guessing games with the market. And above all, he never viewed the market as his main source of income. I remember clearly one afternoon sitting by the veranda when he said, "Trading is not a profession for making money. It is a profession for keeping money."
I don't trade to get rich. I trade so I don't lose what I have already preserved. That is why he never traded every day, never expected to live off winning trades, never traded when his mind was unsettled, and never, ever tried to win it back after a loss. He lived off other assets, real estate, forest land, passive income. Trading was only the place where he chose his moments, like a marksman waiting to take a single shot. I once asked him, "Aren't you afraid of missing opportunities? The market has so many beautiful waves." He looked at me and said, "Opportunities are never scarce, but people patient enough to wait for the right moment are extremely rare." The biggest trap in the market is not a losing trade, it's the urge to jump back in immediately. That's when you lose everything. I remember a time when a friend asked him, "Have you ever thought you were wrong? Volume can deceive too, can't it?" He answered very softly, "Volume can be distorted, but it cannot be hidden. People can fake price, fake candles, fake news, but real trading volume always leaves traces. The question is whether you can look long enough to see those traces.
If his undefeated mindset had to be put into words, it could be condensed into 5 principles I carved deeply into memory. 1. Never trade without understanding the money flow script. 2. Never enter if volume does not confirm. 3. Never expect to get rich from trading. Use trading only to accumulate, and only when the market shows truly clear signs. 4. Never let emotions lead. 5. Never stand with price when volume stands on the opposite side. Some people ask me, what was he best at? I never say he saw the market in a supernatural way. I never say he read volume at some elite level. I only answer this: he was best at one thing. He never needed to win every day, but he never left the market. And I believe that is the true peak. Not a peak of money, but a peak of existence. Trading is not for those who want to eat fast. It is for those who understand they are entering a forest where every small movement can be a trap, and only those who know when to stop, where to move forward, and when to stand still can reach the end of the forest without losing their lives. My teacher is retired now. He no longer trades. Every morning he brews tea, opens the chart, not to place trades, but to watch the market continue to operate as it always has. Strong money survives, weak money dies, and volume remains the only trace that separates the hunter from the prey. I still remember the last thing he said before leaving the trading desk. You can make money from the market, but if you don't understand how money flow works, sooner or later the market will take it all back, and next time it won't give you another chance to return. Remember this. Indicators will not save you, but volume might. Quiet trading bows in gratitude. Thank you for walking with me through this entire journey. In a trading world full of traps, your presence is what gives these stories meaning. If you found value in this video, leave a sign, a line, a feeling. And if you choose to stay, we will meet again in some quiet moment of the market. The market will always be there, but not everyone stays long enough to see this.